Thank you all for being here. I'm Tom Nagorski. I'm the Executive Vice President of the Asia Society, and we are so delighted to have you here, but primarily to have our special guest, the Honorable John Tsang, here from Hong Kong. We have spent the pre-program time on an interesting walk down memory lane, both about Hong Kong, where our former president, Ambassador Nicholas Platt, who is here to my right, and great to have you here, Nick. Nick lived in Hong Kong in the mid-'60s, and I knew that John Tsang lived in New York, but we started a conversation that, quite frankly, could take over this entire program, but I won't subject him or the rest of you to that. More on that in a moment. A year ago, a little over a year ago, we at the Asia Society were very focused when it came to Hong Kong on the political situation there. So was the rest of the world. The streets in Central, the Occupy Central movement, the long simmering dispute about 2017 and the vote. And while that hasn't gone away, 1 year later, or a little over a year later, we are very focused now on the financial story and the implications, such as they are, of the gyrations with the markets and the economy in mainland China. The implications not just for Hong Kong, but for the region and for the world. There may be nobody better suited to address those issues and really pretty much anything that you come here ready to ask and hear about Hong Kong than our guest tonight. So a few words of background. I said I'd get back to the New York matter. So we are, it's important for those of you who don't know that we are welcoming John back to New York. He spent some formative years here at the esteemed Stuyvesant High School. And you're not the only one, by the way, from Stuyvesant in the room. We'll get to that maybe later. And this, for New Yorkers, was the Stuyvesant High School that was then at 15th Street. Not where it is now, but our conversation about old New York has taken us not just to 15th Street and Stuyvesant High School, but the Palladium and Fillmore East, and John's initial forays into rock and roll with Jefferson Airplane, not to be confused with Jefferson Starship. But you can ask him about that if you like. He moved on later to higher education in Massachusetts, not one, not two, but 3 degrees from great educational institutions there, MIT, Boston College, Harvard Kennedy School. And he's here tonight because of his long and distinguished public service in and to Hong Kong. John has served in virtually every facet of governance there: trade, customs, housing, commerce. And for nearly a decade now, he has served as financial secretary in Hong Kong, and in that role oversees policy for all financial, monetary, economic, trade, and employment issues. So we really do have with us the go-to person for all kinds of information and insight on Hong Kong, a man with a critical job in one of the world's great financial centers. The format tonight, John will give his remarks from this podium. We'll have a Q&A. If you have a question, I ask simply that you stand your name card up, and the more of you who do have questions, the less we need to hear from me, which would be a good thing. So please welcome John Tsang. Thank you so much for being here.
Thank you, Tom. Ambassador Platt, distinguished guests, ladies and gentlemen, good evening. I would like, first of all, to thank the Asia Society for hosting this evening's event. It's wonderful to be back in New York in autumn, in October. This is my favorite time of the year. Seems that the Yankees and the Mets are still playing, so a Subway Series is still possible. But of course, here in New York City, the capital of everything, anything is still possible, including, I think, an interest rate hike. But on that score, perhaps even New York would need some help from the Fed. In any case, the imminent rate hike is probably as emotionally charged to investors in different parts of the world as the Yankees-Mets World Series, perhaps even more fraught with uncertainty. And I can tell you, nobody in the financial game is fond of that U word, uncertainty. Still, as the U.S. interest rate liftoff draws closer, policy divergence among major central banks is bound to deepen, and that can trigger even more uncertainty. The result? Continuing fund flow reversals and unusually large asset price adjustments, possibly even destabilization of the global economy. Another crisis? Unlikely, I think, but I would not rule anything out. Some emerging market economies have encountered visible currency depreciation and capital outflow in the past few months. Those with weaker fundamentals face increasing downdrag on their economies. The major concern, in short, is that uncertainty increases the downside risk in an already weak global economy. Seems to be intuitively obvious. As a small and open economy, Hong Kong is subject inevitably to the influence of those external forces. Apart from impending U.S. interest rate hike that has already cast a less than entertaining shadow on the local asset market, the slower than expected recovery of economies in the Eurozone and Japan, a slowdown of growth in emerging market economies such as Brazil and Russia, as well as geopolitical tensions in too many areas, notably the conflicts in Ukraine, the migrant crisis in Europe, etc., will certainly have an impact on our economy. In the first half of 2015, the Hong Kong economy expanded only modestly, growing at 2.6% as against our average growth rate of about 3.9% in the past 10 years. Among other things, slow global growth continues to weigh on our exports. Merchandise exports fell in recent months in tandem with the poor export performance across Asia, a reflection of subdued global demand. Services exports, meanwhile, were up 1% in real terms, thanks to the soaring exports of financial and related business services due to the bullish cross-border financial and fundraising activities. Overall, I'm forecasting the growth of the Hong Kong economy to be somewhere in the 2 to 3% range for the full year of 2015. Over the medium term, I believe that we shall be entering the era of new normal. Everybody's talking about new normals now, where more advanced economies like Hong Kong will maintain a fairly low level of growth. I expect Hong Kong's real GDP will be growing at about 3.5% a year in the medium term from 2016 to 2019. While the Hong Kong economy will have its fair share of ups and downs, I'm confident that our robust economic fundamentals, our resilient financial system, as well as our superb business environment would enable us to cope with whatever kind of pitch, probably a curveball, that the Fed and the global economy will throw over the home plate. Hong Kong has strong economic fundamentals that are underpinned by a sustained current account surplus, strong fiscal and foreign exchange reserves, and a huge international investment position, some 3 times our GDP the last time we counted in 2014. In spite of the recent volatilities and major fluctuations in the financial markets, our robust market infrastructure and regulatory regime ensure that the Hong Kong markets was trading and operating in an orderly and smooth fashion. The currency and interest rate markets remain stable. The banking system has no liquidity issue. As an international financial center, we have been attracting and will continue to do so a world of business and investment. Last year, Hong Kong's stock market ranked second globally in terms of funds raised in initial public offerings, just behind the U.S. At the end of August this year, more than 1,800 companies were listed, including mainland and overseas companies. More will follow, certainly. The Hong Kong Exchanges and Clearing Limited has streamlined its listing process for overseas companies, accepting more overseas jurisdictions as places for incorporation. Nearly 7,600 overseas and mainland companies have set up in Hong Kong. They like, I guess, the Hong Kong advantage, including, I think, in particular, our low and uncomplicated tax system. That, by the way, should soon become even more attractive for multinationals. In the next legislative session that will start in a week or so, we plan to introduce a bill allowing interest deductions for corporate treasury centers. It would also reduce profits tax for specified treasury activities by half. Our independent judiciary and our unwavering adherence to the rule of law is another regional advantage, as is our multicultural, multi-talented pool of services professionals. No less reassuring is Hong Kong's free flow of information and free flow of capital, and the freedom to run a business without fear or favor. That, I should add, is no mission statement. It is an everyday reality in Hong Kong, and you don't have to just take my word for it. In January, the Washington-based Heritage Foundation named Hong Kong the world's freest economy for the 21st year in a row. And just last month, Hong Kong topped the Vancouver-based Fraser Institute's annual Economic Freedom of the World report. Hong Kong has done so, by the way, every year since the Institute's first Economic Freedom report came out back in 1996. Hong Kong is also rising rapidly as a premier asset management center in the Asian region. Last year, our combined fund management business hit a record high of more than $2.2 trillion. The Mutual Recognition of Funds initiative between mainland China and Hong Kong, launched in July, means that mainland and Hong Kong funds will be offered directly to retail investors in each other's markets. The initial sets of applications are being scrutinized now by the two respective regulatory agencies, and the implementation is expected to begin sometime in the near future. In short, it's a breakthrough, promising expanded investment for both sides. In the long run, it will surely sharpen Hong Kong's competitive edge as a premier international asset management center. It will also help promote the internationalization of the renminbi, reinforcing Hong Kong's position as the world's preeminent offshore renminbi center. No doubts there. At the end of August, renminbi deposits and certificates of deposits in Hong Kong was approximately 1 trillion yuan. The renminbi is now the world's fifth largest payment currency. Hong Kong, I'm pleased to tell you, manages about 70% of global renminbi payment. With all the positive signs that I've just mentioned, I'm confident that Hong Kong will continue to thrive as our economy becomes more integrated with the mainland China, and by taking advantage of the growing economic strength of Asia as a whole. As President Xi has mentioned when he visited the U.S. last month, while China's economy was currently facing downward pressure, it would stay on a steady course and operate within a proper range. China's economy grew by 7% in the first half of the year. This has not come by easily, given the complex and volatile situation in the world economy today. The overall growth target of about 7% for China in 2015 is broadly similar to forecasts made by the IMF as well as private sector analysts. This level is somewhat lower than the double-digit growth rates in the past 3 decades. But I believe most of the advanced economies would happily settle for just half of that growth rate. While the pressure of growth deceleration seems to have built up of late, any risk of a hard landing in mainland China, I think, remains pretty low. Indeed, IMF Managing Director Christine Lagarde emphasized that the mainland has the necessary policy tools and financial buffers to manage this economic transition. I second that sentiment. I believe that mainland authorities do have ample policy room to address their current challenges. And in the longer term, the mainland's continuing economic reform should unleash fresh growth potential. Successful structural reform will result in a more balanced and sustainable economy, one fueled by a resilient growth trajectory. That, in turn, can only benefit Hong Kong's longer-term development. You can see the future in Hong Kong all the way from New York. And to learn more about that, I cordially invite all of you to join us at the annual Asian Financial Forum, the region's signature financial event held in Hong Kong since 2007 when I became the financial secretary. The AFF will bring you up to date on every aspect of the Asian region's economies and how it impacts on you, your capital, your business, whatever. Last January, some 2,600 financial, business, and government leaders took part in the two-day financial summit, and they came from all over the world, including prominent speakers from the U.S. here. So I hope to see you in Hong Kong, January 18 and 19 for the AFF 2016. My thanks again to the Asia Society for organizing this evening's event and for its continuing interest in Hong Kong. But allow me as well to offer an early congratulations to the Asia Society, which celebrates its 60th anniversary next year. 60 years of bringing Asia and the U.S. closer together in policy, in economics, to be sure, but also in education, culture, and the arts. As for sports, well, I'm not sure where that fits into the Asia Society and its broad and brilliant reach. But allow me to quote, or perhaps misquote, the legendary New York Yankees Hall of Famer Yogi Berra, who died recently after a long and celebrated life. Yogi said, "The future ain't what it used to be." But when it comes to the Asia Society, some 6 decades into the game of global education and enlightenment is clearly just beginning. But modesty restrains me from saying the same about Hong Kong and our economic future. But you know what I mean. Thank you very much. Have a great evening.